At the beginning of 2022, there were only 4 banks that were like insolvent or technically below 5% of some kind of capital, I don't know, requirement ratio or something. But then the number grew to 330 something banks, within 6 months. So like imagine like December, the end of the year 2021 or the beginning of 2022, you have like 4 community banks, and the number grows to over 300 banks. Over 300 banks, like 75x. The number grows with over 6 months, and it was like still, this is like we are talking like I don't know how many months ago. And then what happened after the rates the rates were hiked even more and more and more, people started to leave in the US. They started to behave like the yield farmers of the DeFi.
Hello, welcome back to Mtambo podcast. My name is Jakub Mtambo, and the following is a conversation with Jakub Simek, a co-founder of Se2 and an author of Wisdom Enterprising. In today's episode, I'll be talking with Jakub Simek about his article called Sam Bankman Fried under the second season of the Balajisms series. And now, dear friends, here is Jakub Simek. Jakub, thank you so much for joining me again at Mtambo podcast.
Hi, Duke. It's a pleasure. I'm happy to be here recording with you the second season. I saw already the first published video. It's great. Yeah. And yeah, I'm happy to be back at home. Tomorrow I'm going to work after my paternity leave. So yeah.
I hope you enjoyed the paternity leave.
Yeah, it's been like Tim Ferriss called Balaji's he called Balaji post-economic, so like I had this like post-economic period of half a year. I didn't need to work, but I'm going back to work, so it's, for me it was just a half year, but it was a very nice half year doing some daily Balajisms with you and like taking care of my 2 kids now, so it was good. Yeah.
Okay, we can start by getting your thoughts on Balaji Srinivasan recent tweet where he likened the Fed to the FTX and created a meme of Uncle Sam Bankman Fried. What do you make of this comparison?
Yeah, I mean, Balaji is great at the memes. He is like creating new and good ideas like every day or every week. And he's also good at the compressing like difficult ideas or like kind of complex ideas into like like memes and into like kind of easy to understand quotes. So the current financial crisis 2.0 that he calls the central bank crisis or even fiat crisis can be explained in these 4 words. It's like Uncle Sam Bankman Fried. So SBF, we know, or our listeners probably know from the FTX fiasco from the last year. Time flies, and now it's like something similar, but now we are experiencing the TradFi winter, so the traditional finance winter, where actually, as Balaji again says kind of nicely, it's that the Fed lied and the banks died. So Fed hiked the rates over the last year, actually 20-fold. It's been never done in the history. Like the Paul Volcker in the 80s, he hiked the rates like 100%, like from 10% to 20%, so like 100% increase. but like here, Jerome Powell, he did it like 20x, like over the year, so it's like almost from near zero to like, what is it, like 4 or 5%, and he's still not finished. So let's see, maybe this was the last hike. Let's see. But over the year 2020, this kind of created big distortions in the market, and also created a hole in the balance sheet of banks, the US banks mostly, but also banks abroad who hold US treasuries. And Balaji says like, okay, it's like he has this kind of again, like strong words like the money is gone or something like that, and he started with this kind of narrative, like was it like 10th of March, like very early, like with his bit signal tweet, and then like the week after that, and he said like, okay, the money is gone. The banks lied, the bankers lied, and now the central bankers lied, and so like this kind of or they hit the insolvency in footnote in footnotes, in like some kind of fine print, but there were just like some indications that the bankers are nervous because their balance sheets are deteriorating because of the actions of the Fed, that the Fed hiked the rates kind of unexpectedly or too quickly. And Balaji likens it to Sam Bankman Fried, who proclaimed like FTX is fine, assets are fine, and now this is the same, like the banks are fine, the balance sheets are fine, and it's also like the Juncker, so it's like the former banker, like from the Europe, the Central European Central Bank. He said that when the things get serious, you know how to lie. So it's like also when the bankers, like they do some actions on Sundays, and then they proclaim like, the Western banking system is it's very stable or something. It's like it's like, why do you have to say say it when so it's kind of so this is so basically Balaji likens the actions of central bankers and their proclamations to SBF, who said like the FTX is fine, assets are fine, and then there was this like 10 billion hole in FTX, and like was like very difficult to explain like what happened, like actually where the money, how can you lose like 10 billion, it's 10 billion is such a like mind-blowing number for like regular people, for us, and with the bank and how could those money disappear, and it's basically similar kind of also mismanagement, and also like a kind of accounting frauds or accounting tricks, and like here the assets were like, some of the assets in the banks were held to maturity, so it was like some kind of accounting trick or accounting way how to proclaim that we will hold these like long-term US treasuries to maturity, so we will not sell them before they mature. And so because if the banks do it now, they would maybe need to get like a 20% or 30% haircut, because the US treasuries, because of the interest rates went vertically, the older long-term US treasuries, their value kind of got reduced or diminished, so their price, because of
so these are the US treasury which were bought by the small
which
community
were
banks
the small
during
community
COVID.
bank. Yeah, exactly. They bought it like in 2022 or 2021, with the expectations that, okay, the interest rates will remain low. And so now, of course, if you can get like much better interest rates, the previous paper, it's like less valuable if you sell it because it doesn't yield as much.
Mm-hmm.
Yeah.
Okay, I see your point, Jakub. So the sudden increase in deposits followed by the rapid rate hikes created a significant issue for banks, and it seems like many were caught off guard. Do you think regulators were aware of the potential risk and did not act accordingly?
Yeah, so it's like in 2020 and 2021, the community banks saw like the rapid increase in deposits because of these like so-called STIMI checks. Like people got like in the US, got like these
Stimulus.
stimulus checks like 1,200 or I don't know how I live in Slovakia in Europe, so I didn't get that stimmy check, but like it was, I mean, good for them, and they put it in these like community banks, and so they saw like a flood of deposits, like coming rushing into the bank, and they didn't know like what to do with it, like so. I mean, and I mean the principle of the traditional banking is like um, to like it's like the maturity transformation, so like they buy like they invest in long term, but they have like these short-term obligations, like so. And these were in 2021 they had a lot of money, like maybe too much, and they invested heavily in these long-term US treasuries. And in 2022, when the interest rates were hiked, they had this like a hole in in their balance sheet. So, but like it's like they were like whiplashed by the COVID, and then also by the inflation and the rate hikes, and also like nobody had like the Ukraine invasion in their like bingo cards, and so. So this was also an issue because of the inflation and the disruption of the supply chains. Yeah, so like but imagine like an example of like during COVID there were times that you couldn't buy a toilet paper, or there was
Yeah,
like
yeah.
not enough toilet paper, so people were like hoarding toilet paper, or they were like buying too much of it, and then so like
It
the
became a
shelves were,
commodity, a
yeah,
valuable commodity.
yeah, valuable luxury commodity. So there was like no toilet paper, or the shelves were empty, for a certain time, and then what happened, like after some time, I don't know, a few weeks or months, and now there was like too much toilet paper, like so it
Yeah.
was like the opposite, because I don't know, like people overproduced, so it's like a sinusoid, so you had
Yeah,
like
and it's
too
the same as
little, yeah,
it's the same
and
as the 2008 crisis, because the houses also they are overproduced. There's too
yeah,
much house
exactly.
product.
Yeah,
Yeah.
yeah, yeah. It was like some kind of delayed price signal. The prices were too high, so they overproduced, and now they had like too much supply, and so the prices catered because there was not enough demand. So now this is something similar, but it's like they had too much money, too much deposits, and they put it into US treasuries, and they got like the toilet paper in return. Like a kind of like
Yeah, that's funny.
yeah, 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 yeah. I mean, it's like okay, but like I thought, like when Balaji is talking about it, he's like, okay, he's like too radical, or he's like sounding like too radical even for Bitcoin maxis, or it's like, okay, it's like this is, or some people said like, oh, this is not the Balaji we know, because he's like, I don't know, like he's kind of the use of words and something, it seems like too radical. And when he says like the money is gone, it's like, is he like oversimplifying or something? But I think he was just again like, of course he's like not 100% correct or right on everything. He's like he makes mistakes, as everyone does, but like here, at least with this kind of narrative, with his narrative, I think he was like only maybe like two weeks early than the most the other commentators who actually also came up with the similar narrative now, like, and also not just narrative but like studies and numbers where they found out it's not just the whole from the US treasuries is like 620 billion dollars in the banking system, but if you count also the other like securities, like the mortgage-backed securities, like let's say from the commercial real estate and some other assets, like similar assets like this, now the whole kind of grows to like 1.7 trillion dollars, and the authors of this study, I think it's the University of New York, or New York University. Yeah, they estimated that you have like 18 billion or 17.5 billion, trillion dollars in the U.S. banking system. But actually, the equity of banks, because it's like a fractional reserve banks, and they don't need to have all the deposit, so their equity is only like 2.2 trillion. So it's like the whole is like 1.7 trillion, and the total equity in the US banking system is like 2.2 trillion. So so it's like it's not like the money is gone, but it's like 81% of money is gone, so if you calculate it, and of course there could be other holes that we don't know about it, but it's like it's a lot of holes, and but some people are like have these like counter arguments, like but like the fractional reserve banking system kind of is always in illiquid, if there is a bank run, the bank will never get all the money, if there is a bank run, it's like they have, I don't know, 10% or 6% of the money
cash
kind of available. And these kind of securities they can sell, or assets they can sell to satisfy customers who want to leave, but they never have like 100% of the deposits, and when they do this bank kind of stress tests, I think they have like scenarios like 30% of the depositors leave or something, but they have never something like more of or 50. I'm not sure if it's like 30 or 50. I'm not even sure if they do like 50, but imagine like like in the case of Silicon Valley Bank, it's people are very connected through group chats, and also they read Twitter. And as we discussed before, even like before the news hit Twitter, it was kind of almost it was too late to act, because like most of the people got the information through group chats, and they are like highly connected through group chats, and so they managed to withdraw their funds earlier than others. So it's like as we discussed, it's like the attentionalism is more important than capitalism, but like there is this like communitarianism is even more important, or upstream of attentionalism. So if you have Twitter, it's like attentionalism. Downstream media, it's like the regular capitalism, or and then like the group chats are upstream of Twitter, and the group chats are like your community or communitarianism. So it's like this is like what creates actually wealth, or preserves wealth, like if you hang out with the right people, like who have the right values, or it's kind of or right information as well, or fast information, it can help you to protect your wealth. I think it's quite an important point from this digital bank run on Silicon Valley Bank, because it was like 42 billion left the bank within few hours, which is crazy. And it was like even before the news hit Twitter. and we know that what Balaji calls downstream media, right, are downstream of Twitter. So like imagine you need to be like not just reading the downstream media because you are like two days or 1 day slow, but it's not enough to be on Twitter, but you need to be like
Well
in the right
connected.
group chats. Yeah, in the right group chat. So I think, I mean, it's a good it's a good framework, and I think it's a good realization, like what people need to do. Like they need to just like be in the right projects, in the right group
Networks.
chats, networks,
Deep state networks.
deep networks. Yeah.
Well, but that's a very worrying revelation, Jakub. It seems like regulators fail to inform citizens of the potential risks, leaving them vulnerable to significant financial losses. Do you think these crises are consumer-facing crises like the global financial crisis of 2008, that is?
Okay, yeah. So the regulators were aware of these kind of risks, and also they were aware of the deteriorating state of the balance sheets of banks. Because I'm not sure if it's like Kansas Fed or something. There was some paper like Balaji is quoting it, where within 6 months, so at the beginning of 2022, there were only 4 banks that were like insolvent or technically kind of below 5% of some kind of capital, I don't know, requirement ratio or something. But then the number grew to 330 something banks, within 6 months. So like imagine like December, the end of the year 2021 or the beginning of 2022, you have like 4 community banks, and the number grows to over 300 banks. Over 300 banks, like 75x, the number grows with over 6 months. And it was like, still, this is like, we are talking like, I don't know how many months ago. And then what happened after the rates, the rates were hiked even more and more and more. People started to leave in the US. They started to behave like the yield farmers of the DeFi. They started to chase higher returns in money market funds. We discussed also before that the EU or the Europe doesn't have such an industry, or they kind of crippled this like money market funds industry previously. So the US has this kind of like strong industry, and so the deposits were leaving like few months before the Silicon Valley Silvergate kind of crisis and Signature Bank crisis. So and other banks like Credit Suisse and others. So this happens like a month gradually. It's like it's happening gradually and then suddenly. So it was like it's like kind of the peak of an iceberg. So and then okay, like it's a different type of crisis, Balaji thinks, for a couple of reasons. For example, there is this iPhone moment, but the iPhone came in 2009.
2007.
Okay, sorry, 2007, but like it was still kind of early, like for sorry, you're correct. The Bitcoin happened in 2009, but okay, but it was still kind of early, like it took a couple of years when like people like most of when the smartphone became as big as it's now. So in 2000, also the crisis actually happened in 2007 or started to happen in 2007, and then in 2008, and in the Europe, in the EU or in Europe, it was like a couple of years kind of later. So Yeah, there was like one thing. So these digital bank runs, the internet, or the mobile banking wasn't so developed, as it is now, and
Mhm.
it wasn't also like a consumer facing crisis as it is now. It was like enterprise crisis. So like people were discussing like these credit default swaps, some kind of like special purpose vehicles. I don't know, some like this kind of like it was like kind of obscure as these like finance is
Mhm.
intentionally obscure as we discussed also before, and Balaji says like okay, it's kind of often a very zero sum environment, and so you have all these like credit default swaps or
Yeah.
obligations, this and that, and some off balance kind of vehicles, and a normal person is kind of feeling like intimidated by it, and these kind of percentages. And but Balaji says, okay, it's like you don't need to be like too much intimidated by this kind of language, because it's like on purpose, like technical, and it's all they're like misusing math to obscure, or they're using
Mhm.
math to obscure. And Bitcoin is
Mhm.
it's money backed by math, so
Yeah.
it's like very simple math with Bitcoin, meaning like okay, you have like 21 million and it's like fixed supply, and of course it's secured by cryptography and this and that. But like this kind of financial lingo is like just like
Mhm.
it's on purpose, it's too technical and too kind of intimidating. But anyhow, but what happened like in 2008 was like the subprime mortgage crisis, where okay, people had like they had like let's say like you have like one mortgage, and then you can also take another one on the same house. You had like this kind of it was just so of course it was involving consumers, but like mostly what happened was like this liquidity crunch or the credit crunch between the banks, like some kind of like they are lending to each other. There are like some
Yeah.
overnight kind of transactions between banks, and this kind of market dried up, and so the government need. And of course there was these like Lehman Brothers and Bear Stearns and some other like big banks that had troubles, and like the government
Mhm.
stepped in, backstopped the industry. But it wasn't like okay, first of all, 2009 didn't happen yet, so there was no Bitcoin. Actually, Bitcoin in the Genesis book, the banking crisis is mentioned, so it was like a reaction. It was
Mhm.
also partially, at least it was like it was a reaction to the financial system, like it was like a better alternative. So that was like one thing. So the digital gold didn't happen, and the Fed or the FDR actually defeated gold, the real gold,
Mhm.
in back in the 30s, with
Yeah.
the executive order to seize the gold.
Mhm.
So so okay, so there was no
Yeah.
alternative to the US dollar, and also it wasn't like actually consumer facing crisis, in the sense that consumers didn't feel that okay, this is impacting them immediately, like their deposits are not safe, because it was like often like these big banks who were trading these derivatives and this kind of like opaque kind of instruments. And so but
Mhm.
now Balaji says that you had like 40,000 like small and medium sized businesses. You had like 40,000 startup founders or CEOs who realized like okay, they had the accounts in the Silicon Valley Bank, and they realized that their money is not safe. And what he saw, it's actually quite amazing for him. Like he saw like Indian founders moving money from the US banking system to the Indian banking system.
Wow.
So it was like one of the most amazing flippenings he saw, says Balaji, in his life, because now the Indian banks are more trustworthy
Yeah.
for many people than the US banks. So it's kind of crazy,
Yeah.
crazy
Nice to
situation.
see.
Yeah. So
Okay,
yeah.
that's that's an interesting observation, Jakub, and I like the example that actually it just hit my mind right now, like the comparison between the 2008 crisis and this one is 2008. Yes, it might be even be maybe bigger one, but it didn't have that much impact because I mean, it was not a social media era. People are not that connected, so it didn't spread that much like right now. So right now, the people are so much connected with even chats and iMessage and social media. They can communicate very fast and they can withdraw their deposit very fast. So this one is more intense than even 2007 because of that connectivity between citizens. Yeah, but it seems like the crisis has eroded trust in the U.S. banking system, leading to a shift towards alternative asset like gold and Bitcoin. Majorly Bitcoin because gold now is not is or still there are people who are trading in gold, but more people are into digital gold, Bitcoin. But do you think this trend will, as you finish this episode, do you think this trend will continue? And what do you think the future holds for the US banking system?
Yeah, I mean, it's difficult to predict like the exact timing. It's also like Balaji with his bit signal. He his bet that Bitcoin will hit 1 million within 90 days. I mean, he's not like backtracking it like explicitly, but he says like, okay, this is just like kind of, he thinks like he's directionally right, and he in a sense already won the bet in a way that people are more serious about like what's happening, and also like the more and more people are saying that and writing like that the banking system has some real troubles because of this like technical insolvency, and it's not just like the typical fractional banking situation, but they're real like the value of those assets and the balance sheets deteriorated. So and you also have like this commercial real estate crisis that is looming, and I think what people are not discussing and what might happen actually this year, and is another kind of like a gray swan. It's the manufacturing kind of thing, like the community banks. If there is this credit freeze or credit crunch, the like the small guy, like the normal person, the main street will suffer, like the small enterprises will suffer.
Yeah.
But and then you have these like big systematically important banks, and they will have some issue, or the big banks will have some issues with like commercial real estate, with that the value of these their portfolios will also kind of suffer because of remote work, because not enough people are returning to the offices, and because of some overproduction or over construction, and yeah, and also like and also then the housing market will probably follow because people will not be able to afford like such big mortgages with such high rates, interest rates. But I think what is a black swan or a gray swan is actually manufacturing, and especially automotive industry. It's like Balaji is not talking about this, but like yet, but or I haven't noticed yet. But I think this is actually something that might break the system at the end, because it's like the factories, and it's like the backbone of actually this industrial era in the West. And it's, you have these like legacy automakers, I don't know, the made in Germany brands like the, I don't know, Mercedes, something like that, and it's like this is actually like what's like these European brands. And I think what's happening in China, like they have a like very strong kind of like competition emerging in China, and Chinese kind of authorities seem to be keen to chase away the European or the Western automakers. And yeah, and there is like this trade, not just like war, but like there is this kind of big fight of these automotive companies within China. And I think it will like trickle down to these like big legacy automakers in the West, and it will or cascade down, not trickle down. It will cascade down, and there will be like, this will hit the economy, and this might actually break the banks, so kind of indirectly. I mean, of course, like also these big legacy automakers, they have like they're over leveraged, or they have like big loans, like huge loans. So that's also like one thing, but like it's kind of I think it's more on a like kind of emotional or mental kind of like psychological level. It's like, like if this, like imagine like some big legacy automaker kind of goes under, then I think it's like an end of an era. So I think that's like a kind of like my prediction. Just like observing some weak signals going from China, and how which is actually the biggest market for many of these like automakers, legacy automakers from Europe. So yeah, it's like there are a lot of headwinds on a horizon. Yeah, so but with the US banks, I don't know, I'm not like a bank analyst. I don't know, I think they're quite connected with the European banks, and so I don't think that our banks here in Europe are immune. There are some differences, like probably like our European banks are more conservative, and like all the banks are like regulated under these like Basel 3. Basel is the city in Switzerland. Yeah. So Basel 3 regulations, but these commercial banks, community banks in the US, they were not regulated under Basel 3. So but it's like if the US sneezes, everybody will catch a cold. So I think it's true, but with the exception probably of countries who are like ahead of the curve, and who are like buying into Bitcoin and crypto, or buying into like tech in general, like there, I don't know, Saudi Arabia, they're trying to they're trying to get like some tech talent overseas, or build some like new cities. United Arab Emirates, they are trying to position themselves as crypto friendly. Even Hong Kong, which is kind of strange move by China, and of course El Salvador and these kind of countries. So
actually, China, I've seen on TikTok, they have introduced like Bitcoin on Twitter. So I just saw the news some hours ago. Like
really,
yeah. So I don't know if they're reacting to the Restrict Act by the
probably,
US. So it's, but as I said before, this might surprise even maybe US. You could see like China coming back hard with crypto. So, and they decide to say back their currency with crypto. Yuan is backed by Bitcoin. So, and it might leave US in a bad situation, just because of stupidity in regulation and their system of banking. I mean, the banking system.
Yeah. I think it could be like I mean, we discussed before how how China like has chastened away and kicked out the Bitcoin miners, and they went to the US. But but it doesn't mean that they're probably kind of like forward looking on crypto. So they might also change their mind, but they might also like play this kind of power games. And there is this new book, Soft War. So it's not like software, but Soft War, by Jason Lowery, I think is his name. And I just listened to a couple of hours podcast episode with him, and he has this like kind of idea that Bitcoin with a proof of work, it's like a power projection, a global power projection through electricity, like through power grids. And it's like a kind of like a modern, so basically the government should embrace Bitcoin as part of some kind of like modern warfare or power projection or competition. So instead of like kinetic warfare where you like shoot bombs and bomb other countries or something, you just like compete in producing cheap energy, like let's say through nuclear, and like securing the Bitcoin blockchain, and like getting as much Bitcoin and like kind of Bitcoin mining as possible. It doesn't need to be done through state. It could be done through like private sector as it is done now. But I think China might be like playing like some 4-dimensional chess here, or at least like they have Hong Kong, and like Hong Kong was always kind of like it was always the financial kind of center, but now they integrated it more, and kind of it's not as free as it was before. But like now they can say like, okay, but it's open for crypto, and please, it's open for business. How can we help? And let's see how it will play out. But like if the US was smart, then they would actually buy Bitcoin, not ban Bitcoin or burn these like fiat to crypto bridges. Yeah. And actually the guy who wrote the book, Soft War, is like he's in the US Army. He's like some what is it? It's some kind of space corp or something, like so he's like quite is a smart guy into Bitcoin, and he's like the state employee or something, so it's like it's not everybody's from the private sector. So I mean that's what the countries should do. So don't ban Bitcoin, buy Bitcoin.
Okay, I think that's a good wrap up. But I think with the Bitcoin signal meme, Balaji is trying to also raise an alarm on the internet and get as many people on the Bitcoin lifeboat as possible before the fiat to crypto bridges are banned. His advice for these days is to buy Bitcoin, get it off exchanges, and move to a crypto-friendly jurisdiction. I believe that this crisis has exposed some of the fundamental flaws in the US banking system, and it will take significant reforms to restore trust and stability. Well, Jakub, thank you for having you here at Mtambo Desk. It was a pleasure.
Yeah, thank you, Duke. It's always great to talk to you, and have a great time, and see you soon.
See you soon too. Well, that brings us to the end of this episode. If you enjoy listening to Mtambo Desk podcast, don't forget to subscribe, give this episode a thumbs up, and be sure to come back next week for another episode. Until then, this is Duke Mtambo, and don't forget to do good always.